Welcome back. You're watching Startup Central with me, Nayantara Rai, working from home. Well, working from home because of COVID-19, we've seen an acceleration of adopting digital practices, and we've of course seen that in the payment scheme as well. In November of this year, the festive month of November, we saw UPI transactions cross 2 billion. What's also happened is that the banks, who perhaps never anticipated the kind of traffic, have not upgraded their infrastructure and their IT systems. Bank outages has been a problem that fintech players have been talking about. It's resulted in HDFC Bank, for example, seeing a massive outage that resulted in the RBI banning temporarily HDFC from coming out with new digital initiatives. We've also now heard about a massive outage at SBI Yono. RBI Governor Shaktikanta Das today addressed the issue and said he's concerned about it, wants banks to upgrade their tech. I'm going to be discussing this and more with Ashneer Grover, the co-founder at BharatPe. Ashneer, it's always a pleasure talking to you. Thanks so much for joining us here. Now, India's digital payment highways are seen to be the most advanced in the world. We all know how Sundar Pichai and Google have praised UPI, wanted to come out with their own UPI, how the NPCI wants to take UPI global as well. But back home, a critical backbone in this infrastructure process, which is the banks, need to play catch up, need to upgrade their tech. But is it fair to only say it's up to the banks to do so? And have they genuinely been falling behind?
Thanks, Nayantara. Thanks for having me. It's always a pleasure. Yeah, I think it's a simmering issue. It has been a simmering issue. UPI has grown tremendously over the last couple of years, and that's the space we operate in. And even if we look at purely UPI as a barometer, the transactions have gone from 0.9 billion to 2.2 billion in a matter of 6 months. Now, it has happened along with the failures at the banks, right? And clearly one of the reasons is, and it's not even technology, right? It is at the base of it pure IT infrastructure that you need to put. It's not a new technology or any artificial intelligence you have to create. Just put more servers, right? As simple as that. And I think the banks have been sleeping at the wheel as far as digitization is concerned. And what pains me more is the fact that actually, if you look at it, the biggest beneficiaries of digitization have been the banks themselves. So if UPI was not there, billions of transactions would still be happening through ATM withdrawals, through checks, or through branch transactions, which would have cost a fortune to all of these banks and would have stressed their balance sheets even much more than they're already stressed. But instead of appreciating what UPI is doing and clawing back at least some percentage of the savings they are making because of the digitization brought in by UPI, they've just been booking those as profits. And, one day the chicken has to come home to roost, right? And that's what's happening. Right?
So you're saying, okay, they need to upgrade. And I want to understand from you, in the last 6-7 months, and, since COVID-19, what has your personal experience, BharatPe's personal experience been with outages? Now on social media, of course, it's become a burning issue. And people are saying it's not just HDFC and SBI. They talk about how all banks have faced outages, which also then means that not only have the consumers have had to pay for it, but those with skin in the game, the fintech players have also, you have to face the ire of the consumers. It holds up your payments. Share a little bit about your experience.
Absolutely. I think there have been outages, and there have been outages in the past as well. I think the frequency of the outages and the tenure of the outages has grown, and which is concerning because now for a consumer or for a merchant, banking is UPI. The primary interface for them banking is either a BharatPe or a PhonePe or a Google Pay. It's no longer the bank's branch. Now, we can do a great job at technology, but we cannot, solve your server issues, and the amount of space that you need to put at your servers. That the banks have to be cooperative with us and do at their end. And because of that, what happens is it ends up being as if a phone pay is down or a Google Pay is down, but it's not. It's actually the SBI or the HDFC at the back end which goes down. And because we are facing the customer, we of course bear the brunt of it, and which is fine because that's the risk our business entails. But I think at the fundamental of it, the demand is going to keep growing. It's not getting any lesser, right? And therefore, the success rates of transactions have also to grow. Otherwise, the unsuccessful transactions in quantums would be in billions. So I think it's a good wake-up call for all the banks. I'm personally very happy RBI has taken cognizance because if there's one fear of God that the banks have, that is truly RBI.
I'm going to play devil's advocate here, and I'm going to ask you one question. We all want banks to upgrade. Of course, they must upgrade. Yes. But, I had the PhonePe co-founders on the show yesterday, Rahul Chari as well as Sameer Nigam, and they raised a very pertinent point, which was, what's in it also for the banks? Yes, they're seeing higher volumes, transactions, a lot more business, but you have zero MDR. What's in it for them? They can't charge for UPI transactions. Most of them are listed players. They have shareholders. They're responsible to the boards. How can the system also ensure that the banks become a winner? Or is your case the banks are already a winner?
Absolutely. I think it's a very good topic, and I think it needs to be clarified. Zero MDR is not the culprit, right? I can tell you that the amount of money a bank saves for every less check they have to clear, or every less ATM withdrawal they have to process, the benefit of that is 100 times more of any revenue they could have made on MDR in any case, right? So I think it's a very convenient argument. It's used by fintechs and banks to shy away from what is the real thing. But the fact is, the savings these guys are making or the banks are making because of digitization is much more than the revenue they could have built on MDR. So let's not cry about the 0% MDR and let's not make it the culprit in the first place. I think what the RBI also needs to do is provide boundary conditions, right? I think if you leave it to banks, everyone would say lesser cost is good because my P&L looks better. But that's not how things are going to, improve. I think to improve things, the RBI has to come up with norms saying, if you put certain $1 million or certain percentage of your top line into your digital infrastructure, then you get certain benefits either on the CRR requirement, the SLR requirement, or any priority sector lending requirement. So somewhere you have to create that balance sheet headroom for the bank so that when they put money into digitization, it seems to them at that point of time that that's money productive, because by themselves they are not able to quantify for themselves and put a number to it. So the RBI will have to be more proactive and give some sort of incentive on the balance sheet for these guys to put that kind of money behind their IT infrastructure.
Time, there used to be, for example, an interchange fee, right, that the banks had to pay the NPCI for being a service provider. I believe it's been done away with for the merchants. But once again, what would your suggestion be, like, so that banks actually upgrade, or is this a case of where they need to be pushed by the RBI to make investments which they have delayed, something like we saw in the telecom space as well?
Yeah, I think a certain percentage of their profits, like you have the CSR requirement, right? I think the time has come to talk about a CDR requirement, right? A corporate digital responsibility. So for the banks, there has to be a certain percentage of their profits which has to be spent on digital, every year and every financial year. And I think the RBI needs to mandate that. In my head, that number has to be somewhere around 5% or 10%. If the financial services in India have to grow to the next level and we want to be as ahead of the world as we are with UPI, the banks have to come up significantly. And therefore, I would propose just put a 10% corporate digital responsibility surcharge, which they have to sort of take out from their profit pool and put towards digitization.
Ashneer, we've also been now reading of how certain fintech players are saying that UPI payment clearances are taking time, that sometimes they're delayed. Is that correct?
Absolutely, absolutely. I think post Diwali, there have been at least 4 or 5 days of major delays and outages. And I think, invariably it happens with either an SBI or an HDFC going down, because those guys have the scale. Between the two of them, they would account for 50% of all transactions on either side, right? Whether the originator or the beneficiary bank. Now, if either of them goes down, it causes queuing in the system and a ripple effect, and the whole UPI stack gets clogged. So yeah, absolutely right. There's no denying it. A lot of people would not accept it, but I would put it out there and say, yeah, it's a fact.
So what's the way forward? Have there been ever any conversations between at least the large fintech players and the banks?
I think the real conversation has to be between NPCI and the banks and the RBI. I think things are going to change there. See, we're doing as much as we can despite the bank's infrastructure, right? The 2 billion transactions have, as I keep repeating, have been reached on the back of a phone pay or a Google Pay or a BharatPe, right? And we are able to handle those transactions. You're talking about 2 billion, you can give us 10 billion transactions, we'll still be able to handle it. I think what needs to happen is NPCI and RBI have to sit with the banks, take stock of how much money are they spending on IT infrastructure, take stock on normative savings they have made because of UPI, quantify it, and give them directions that Bank A has to put 100 crores now behind digital, Bank B has to put 50 crores, Bank C has to put 20 crores. Now, where that money can come from, again, there are a lot of innovations. Maybe NPCI can give some dividend backs to its shareholders, because most of these banks are their shareholders. So maybe NPCI can give back some dividend and make them invest that money back into digital. So a lot of innovation can be done on where that money is going to come from. But I think the real stakeholders are RBI, NPCI, and the banks, not the fintechs at this point of time.
Okay. Ashneer, it's always a pleasure talking to you. Thank you so much for being so candid and joining us here. Some valuable suggestions also coming in from a leading fintech player on what needs to be done just so that this ecosystem becomes a win-win for all the stakeholders, because everybody is dependent on everybody. It's symbiotic at the end of the day. Thanks a lot, Ashneer, for joining us with that. Ladies and gentlemen, we're going to take a short commercial break, but stay tuned. Coming up on the other side is Soonicorn. We're going to get you Rebel Foods, breaking its silence for the first time since COVID-19. We will also be in conversation with MobiKwik. It has raised 52 crore rupees, but again, a leading fintech player with its views on the burning questions that we're seeing right now about the bank outages.